We partner now with the FT to bring you more details. It's Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Joining us now live from London is Luke Templeman. Luke, always glad to have you with us. The last quarter in the UK, investors seem to be pouring money back into commercial real estate. So is the market turning?
Yeah, that's right. So in the last quarter, institutional money that went into UK commercial real estate was at around £3 billion, and that's up from peaks in 2006 of £1.6 billion. So we're seeing investors very optimistic at the market. And that's coming out of a lot of corporate earnings results, such as this morning, Hammerson, one of the UK's biggest property trusts, released their earnings. Very poor first half, but a very good second half. Asset values moving in the right directions, rents moving in the right directions.
But, I mean, fund managers are still cautious, are they not, Luke?
Yeah, you bet. I mean, unemployment is still very high. Inflation last quarter came in far above target, and that puts pressure on interest rate rises. And in addition, the Bank of England's quantitative easing program, which has been credited with pushing up asset values, has been suspended, and that may put downwards pressure on asset values. Now, one black hole that's on the future is the amount of property on banks' balance sheets. Now, 2 weeks ago, we saw Royal Bank of Scotland take on about £1.8 billion worth of German property that it lent money to, very reluctantly. Now, they're probably sitting on losses of hundreds of millions of pounds, and if they, like other banks, have to sell, we may be looking at property to flood the market.
What about property trusts, Luke? How are they responding?
Yeah, well, the buzzword during the credit crunch in property trust speak has been active management. And that means that property owners are trying to extract value from their assets operationally rather than just buying or selling them. An example of that might be incentivising tenants who are underperforming to leave earlier and bringing in tenants who might be better suited to a different shopping centre. Now, that's great, but the problem is that by its very nature, real estate doesn't lend itself to a lot of operational management compared to other companies. It's invested in for its steady income stream. So it's perhaps a little bit premature to assume that the recent uptick in interest in commercial property signals a long-term trend.
Luke, we only have about 30 seconds left, but the one sign that people are telling you will be the one to say the turnaround is for real, it's what?
It's going to be when vacancy rates in commercial property fall to pre-credit crunch levels, and we end up being able to charge tenants the same amount of rents that we did before. It's sort of very simple fundamentals. There's very few levers to pull, but for the big trusts who are quite complex in nature, being able to pull them in the right direction is at the moment still in its infancy.